Even though the winter season in Europe continues, oil prices have started to ease. The previous trading day turned out to be rather unsuccessful for the oil market. Bullish sentiment failed to drive the quotes up, and they dropped below $80.50 per barrel. Although oil managed to consolidate above $81, market participants lost confidence in its upside potential. On the one hand, this movement can be seen as a correction in the overbought asset. On the other hand, it may indicate that oil has reached its price ceiling. If the second assumption is true, oil quotes will most likely enter a sideways range or go down. From a technical point of view, there are two possible scenarios of further dynamics in the oil market. Obviously, Brent crude oil futures have entered a phase of stagnation. As long as the price is above the psychological level of $80 per barrel, oil has every chance of resuming its bullish run. Long positions can be considered if the price consolidates above $84 per barrel. Alternatively, if the price fixes below $79 per barrel on the daily chart, oil is expected to edge lower. As for the foreign exchange market, the ruble continued to gradually pare losses as expected. As already noted, the ruble's decline was triggered by speculative moves. Thus, with the return of players to markets, the currency pair is going back to its normal levels. For now, the dollar is still stronger than it was even on December 29, but the Russian currency is on the path to recovery. The only question is whether the ruble will be able to strengthen enough in the current trading. After all, tomorrow's macroeconomic calendar includes US inflation data, which can dramatically change the situation in the financial market. In the meantime, the dollar-ruble pair continues to recover from speculative fluctuations. If the trading instrument fixes below the variable support level of 75 rubles per dollar, it will most likely hit towards the 73.50 mark. Otherwise, the pair's correction may well develop into a sideways movement. Contrary to expectations, gold kicked off the trading week with solid gains. The precious metal broke through the psychological level of $1,800 per troy ounce and moved further up. However, such a movement can hardly be called inspiring. This is not the first time the asset has been standing still around $1,800 per troy ounce. Fluctuations usually occur in the range of $1,790 and $1,810, and gold rarely breaks out of this zone. The most frequent scenario implies a breakout of the upper boundary, which indicates an increase in bullish positions on gold. Thus, the asset may well consolidate above $1,800 per troy ounce, unless US inflation data changes the situation. Despite its anticipated stagnation in the $1,780 and $1,800 range, the initial continues to move above the $1,800 mark. If the price consolidates above this on the daily chart, gold will have a chance of gaining upside momentum and approaching the level of $1,830 per troy ounce. Well, that's it. May your trading be lucrative, and see you soon.